I'm Daniela Cambone, and welcome back to Stansberry Investors Summer Series. We are talking the Federal Reserve with my next guest today and their latest moves. Please welcome back to the show, E.B. Tucker, author of Why Gold, Why Now. E.B., welcome to our summer series. Always good to see you.
Good to see you. Thanks for having me.
All right. So we just came off the end of the latest Federal Reserve meeting here, E.B., and two main things I want to talk to you about. One, they acknowledge that they're making some progress towards the economic improvement they want to see before slowing down their bond buying. But most believe this won't happen until November now. And two, I want to talk about something they brought up regarding the repo market. And basically, they're making sure the repo turmoil is never repeated. They said they are launching new facilities designed to provide liquidity to big Wall Street banks and foreign institutions like central banks, which could help ensure market stability at times of stress. So really interesting. And I want to get your thoughts overall on the Fed's latest moves here.
Well, the Fed's always going to pursue policy of least embarrassment. That's what people need to understand. I mean, they're going to do things. They're going to always be trying to navigate in a way that they don't get egg on their face. But I think everyone in the U.S., they have this nostalgic idea that the Fed's here to help them. And I don't think the Fed's here to help you. I think the Fed's here to help itself. Go back. The good thing to do is it's like if you're in a bad relationship and you write down all the things you were promised that were never delivered on. Look at all the things they've said over the last 10 years and then try to remember them. We're going to taper then. We're going to stop buying bonds. We're going to stop this. We're going to raise. Imagine right now they say they're hawkish, which means they're going to have an intense focus on doing, making a change. We're going to raise rates in 2 years by 25 basis points. I mean, that these days is considered aggressive policy. Let me tell you something. They're never going to raise rates. It's never going to happen. I mean, the Fed owns 20% of TIPS. Those are the inflation protected securities. And I see my colleagues and peers on TV on Bloomberg talking about TIPS, right? All the time. Those are Treasury securities that protect you from rising inflation. And the Fed owns 20% of them. So it's not really a market. It's people got to understand here. Stop listening to the chatter and look at the actions.
Okay. I want to zone in on one thing you said there, that you don't think they're ever going to be able to raise rates. Now, other people I've been speaking to say they're going to have to at one point. It's inevitable. And when that happens, crisis will follow. You don't agree with that?
I don't think so. I mean, I think they'll try everything possible to not do it. So right now, this repo facility, I mean, I had the chart up over here. I don't know if you can see, but it looks like a reverse ski slope. So it goes along very low and then it goes straight up. So you have $1 trillion now in this reverse repo facility. Well, no one really knows what that means. So everybody's looking at the headlines and saying, well, that sounds like a lot of money. What is a reverse repo? Is what happens when I don't pay my auto loan and they repo my car. So I got a reverse repo. Nobody could figure out what this means. Well, I'll tell you what it is. It's another defense mechanism to keep the dollar as the world's reserve currency. So all these guys are doing is every time one of the consequences of their actions over the last 20 years causes a hotspot, they create a new facility, a new containment mechanism to keep the dollar in control, right? Because you start seeing assets flow one way, flow another. You start having very strange flare-ups. That's what we're having. We're having all these strange things happen every now and then. Now, this week that we're in right now, there's something big happening, the debt ceiling. So everybody says the debt ceiling. Oh no, I mean, all the conservative-minded people say, this debt ceiling, all they do is always raise this debt ceiling. We're going to go bankrupt. You're not going to go bankrupt. You can't go bankrupt when you have the ability to do all this crazy stuff that they're doing. I mean, you can forestall bankruptcy for decades and decades until people finally just give up on this being a regular economy. This debt ceiling is very complicated. And so you're going to see a lot of media arguments about what do we do about this debt ceiling? We need to raise taxes to help pay for this stuff. Everybody's got to do their part. And Biden's going to say, I'm a middle-class guy that loves chocolate ice cream, and I'm not going to let this country go bankrupt. It's against my roots, and everybody will say, we'll do our part, just a little more tax. Okay, the rich people, they could pay the tax, not us, not the crypto people that are trying to become rich, the people that are already rich, make them pay the tax. Okay, so you're going to see a lot of this. It's very distracting. So while this is happening, try to not be distracted. Look at what's happening. The debt's going to continue growing, 28 trillion, 35 trillion, 50 trillion. It's just going to keep on going. And so then you say to yourself, well, what about the Fed said they were going to raise rates by 0.25% in 2 years? I wonder if that's still going to happen. And what someone smart's going to tell you is it's irrelevant. It's not going to happen. Forget about it. This is never going to stop. You've financialized the economy. I mean, this is like a severe drug addiction. You're not weaning yourself off or cutting back a little bit. You're way past that. You're a full-fledged addict now. So like you're living the lifestyle of an addict. That's what's happening.
I'm afraid there's a lot of truth in what you said. And, as the Democrats, like you said, push along and got the green light to move ahead with their economic recovery plan, that might just play out, Evie. But, what I think is key with the repo news is that it can help ensure market stability at times of stress, which makes me think, what are they preparing for? Or what do they think is coming down the line?
Well, they want to keep dollars in the Fed's system. So if you start having market-based interest rate mechanisms, like if you start having an actual market for capital, then the capital will flow to the best place. That's what a market is about. A market-based economy, the capital makes a decision to flow to the place where it's treated the best. But we're not in a capitalist system. Okay, so that's what people need to understand. So you have to continue creating mechanisms and containment provisions to keep the capital where you want it. So let's say if the euro area, for example, was offering a more attractive home for capital on a short-term basis, and capital started flowing over there, then you would break all the money market function. So now all the money markets are broken. So now, Mr. and Mrs. Smith that have their money market account all of a sudden can't get their money. They don't know what a reverse repo is. They've been, they don't want a repo. They pay their bills, but then they can't get their money. So because all the money has been sucked over to another place. That's what happens in a market. But we don't have a market. What we have is a giant financialized controlled system. And so as you create different distorted policies for different reasons, okay? So you have, the last year, what did we spend? 6 trillion or something like that? I mean, so now the federal budget's pushing 4 trillion. So you see, as these things everything starts growing and there's no interest on any savings, like zero. So you create strange occurrences, and you've got to continue creating ways to keep that money in your system.
Some have suggested that they should be doing 100-year bonds, even 500-year bonds. Do you agree?
Well, they will. Okay, they will, but we got to start. Let's start with 40. So you're jumping ahead to 100, 40. Now look, how do we get people used to that? Well, one way we get people used to that is we made it last year where you didn't have to pay your mortgage if you were struggling with the economic consequences of the COVID emergency. Okay, so now that if you didn't pay your mortgage for the last year and a half, now what they're really doing is tacking those payments on to the back end, and they're effectively trying to create a 40-year mortgage. So you see, it's just a little bit here and a little bit there, and then a 40-year and then a 50-year, and okay, you're going to get to 100. You're going to get to 100-year, but do you see how this it's just, well, just a little bit more. And just a little bit more. And if we could just borrow a little bit more, then we'll be okay. And what are we going to use the money on? Well, we're going to do stuff with it. We need to help people. So this is how this is going to continue going. It's never going to stop. This is never going to stop. So people that say, well, in 2 years, they promise they'll stop. I mean, let's go back to the addict. He says he's going to quit next month. Okay, all right. So that's good. Is he going to quit next month? No, he's not going to quit next month. He's not going to quit till he runs out. That's when he's going to quit. That's when this is going to stop.
So we would need a complete new Fed chair different mindset, like a Volcker perhaps, that would completely change the situation around? Is
Who's
that
going
what?
to do that? Nobody's going to do that. You create so much disarray. The guy would need a whole army to protect him. It's not going to. Think about what would happen if you had that type of personality in there. I think if you go back to the 70s and you read what the Fed chairs were saying, it's really fascinating. I mean, Chris Weber Weber Global, the newsletter, just did a big thing about 70s quotes from all the Fed people. It's fascinating. I mean, they're all saying this transient inflation. It's just like what they're saying now. They say, well, this is only transient, and the prices are going to all come back down, and let's take them out of the calculation of CPI. And we can't put housing in there because it's gone up too much. Well, we can't put gas in there because it's gone, there's a gas crisis, and that's not something we can put in there. And well, we can't put butter in there because the butter prices are too high. So by the time there's nothing left. Right. it's like if you take all the prices out, the prices aren't going up.
But you would need someone like Volcker that could go in and break inflation on the back on the back end here. No, EB?
Yeah, I don't think there's an appetite for that. Because I don't think there's an appetite for that until inflation is so pervasive that the average housewife is panicked about it. Because you got to remember something. At the end of the 70s, our friend Doug Casey wrote a book about this whole thing, and the general consensus in the American suburb was that this is a crisis that's going to take the whole place down. That's not what's happening right now. I'm out with the public. I mean, I'm on the road and meeting with people, and I'm always asking what they think about stuff. They want stock tips. They want to bet on things. So you have a speculative boom. Nobody's worried about the cost of anything. I mean, the price of everything is going up. The power company where I live in Florida just sent out rate increase notices. The rates are going up by 25%. I doubt anyone but me read the rate increase notice. It's very complicated because they break it out into all these different things. 25% increase. Nobody cares. Nobody cares. You see this? You go to the grocery store, go to Whole Foods. Whole Foods, by the way, that's what actual food costs. Everybody says it's too expensive there. Right, but if you want an apple that grew on a tree, like remember how it used to happen this way? That's the cost of an apple. It's not the cost of a genetically created apple that's very cheap. And you get an actual organic bag of groceries, $75 a bag. You see it if you buy these things and pay attention, you see it.
Which makes me think of what Rick Rule had told me, that the Fed is sending a wrong message. And I believe that in a sense, it's destroyed what money is, what the value of money is. So when people are not even blinking at paying $75 for a bag of apples, I mean, it's become almost like, what is money? What does it mean? Like, what's $10 anymore? What's $100 anymore?
It's people are holding on to a notion from a prior period with the money. But this is how it works, is as we know, because anybody watching this is a seeker trying to learn and is not someone that's trying to react, they're trying to act before, is that these things run in cycles. And by the time people realize the building's on fire, it's too late. So that's what people, if you can see this all happen now, you can say what comes next.
Okay, so to that point, because I always like to get a lesson in here somehow for the folks at home. You said it's important not to get distracted, right? Don't get bogged down by the headlines. Don't get taken in by that. How do you not get distracted? What do you do?
Well, I don't have a television. That shocks people a lot of times. And I spend a lot of time in quiet. I make sure I have periods of the day, say 30 minutes in the morning where it's just quiet. There's nobody. I have time to sit and think, because most people, they get up, turn on the television. And then as soon as they're done with the television, they get in the car, they turn on radio. And then they get to the office and they talk to all their coworkers, and they do a tiny bit of work. And then so it's all distraction. It's all day long distraction. And so if you have just a small period of time to settle down and to think. Now, this is what I want to share with you that's very important. This book that I wrote, everyone thinks this book's about gold. It's not. It's not about gold. It's about wealth. And I tell people, as you know, my personal journey. And what I've done is I've bought as many royalties on copper and gold and nickel and strategic metals as I could possibly afford. And the gold, everyone asks you about the gold price. They always want to know about the gold price, but it doesn't really matter what happens to the gold price. These gold royalties, these copper royalties, these are 20, 30, 40-year streams of income from mines. Now, there's no cost in digging, right? The mining company does the digging. And with what we've just described, just think about it for a minute. What's going to be the value of 40 years of 1% gold production 40 years from now? In my opinion, there's no asset that's as exciting as a royalty right now, because while everybody is looking for the next crypto coin, I mean, there's 20,000 crypto coins. How do you choose? Which one is going to go to the moon? You don't know. Everybody wants the next hot idea or to speculate on something. But I've bought these and the gold price has done nothing and the stock's gone up 1,000%. I'm just in New York having meetings with people. I'm trying to explain what a gold royalty is. And these hedge fund managers scratch their head. They go, I don't get it. I mean, it's very interesting because what I see is a path going forward that makes a lot of sense and has been very lucrative. And it's not on anyone's radar. And you have to ask yourself, when people wake up and realize what's happening, what do you want to own? What are people going to want to own? What's going to have value as we go into the next phase of this?
So on that note, let's wrap with this. And obviously you love the royalty play, but I want to know, do you like oil at $60 here? And you know, what do you make of, I got to ask a gold question. What do you make of?
I get it. Energy had a terrible year last year. I bought Chevron for my kids, you know, who are very young. And I felt like it was so cheap that I couldn't believe it. I mean, if Chevron produces oil for, you know, around $10 a barrel or something, it's crazy. And I thought this oil price went negative last year. So oil went so low. Now, as you know, I have a big play in copper royalties. So I know a lot about the energy transition, and you're still going to need a lot of oil. So there's no possible way that you can stop the oil business and have zero oil output. And so when energy companies got so cheap, I mean, I felt like that was a generational opportunity. I mean, some of these things have 5, 6, 7% yields on them last year, you know, and the stocks have done great. So, I mean, look, oil needs to be $75 a barrel for a while average. I mean, it justifies that. The ESG concerns, all the things that are going on, it's going to be more expensive to get oil out of the ground.
Okay, give me timelines here for some energy coming into the gold market.
Well, I'm starting to wonder if we'll ever see any energy in the gold market, because it's strange. It's a very strange time. I mean, I've never seen less interest in the gold market. I've also never seen more excitement in the royalty business. So we're at 70 royalties of Metalla, you know, just in New York Stock Exchange listed company now, MTA, and the business is going great. You know, we've done 6 transactions this year, and I'm in New York meeting with people, analysts and the analyst community, and there's no interest, zero. I mean, it's a Sahara desert. So I don't know if
I feel it.
I don't know if you turn every fire hose on at the same time, if you can saturate it. There's nobody there. There's no interest. I mean, if anyone came into the market, it would move the stocks, because there's that little going on there. And now at the same time, Metalla is started at 80 cents. It's like $8.25 now. Imagine that. I mean, you've gone 1,000% when the gold price has only gone 50% since we started. That's crazy.
Major point. I hear you loud and clear. Would you be buying some silver here?
I don't have enough room for it.
All right. What do you?
The gold is so much easier to store, you know, but you don't need that much gold, by the way. Just like in my book, I talk about how much do you need? Not that much. Okay. People get this all wrong.
Let me ask you the final question. Anything new you added to your portfolio recently that you could share with us?
I've gotten heavier into the copper royalties. I think copper, you know, you saw Ivan Glassenberg, you know, Glencore come out and say that the copper supply needs to effectively double. Yep. And I'm telling you, I know all the major copper potential mines, forget about it. You're going to need much higher copper prices. So I think that's a sleeping play right there.
But plain copper, it's only royalties for you.
Yeah, I'm not messing with digging and blasting and dynamite, you know, and I'm not doing it. It's too expensive. You have glaciers and the chinchilla population's got to be moved, and the ESG people are picketing the project, and Chile has got a giant tax going in. It's too complicated. With the royalty, you're 1% of everything that comes out of the ground, and you don't care about any of the protesters and none of that stuff.
I know you got to run. I promise last question. It's a lighter question. How's your summer going?
Is it summer? I mean, I'm in Florida. It's hot all the time. Yeah,
it's summer for you all the time. It's not fair.
Yeah, it's summer all the time. I'm having fun. I mean, I spend a lot of time outside, and I try to take these periods of the day to have quiet and to walk and to do things because I feel like we were talking about earlier that's the key to success, is being able to disconnect. And when you do that, you can see what's going on. And I feel like people in the US, they can't do it. They got their telephone. Some people have 2 telephones. They're looking at the telephone all the time. If you want to do something fun, this is E.B. Tucker's advice. Try with your family, leave your telephone at home and go somewhere with your family.
E.B. Tucker, we can't find you anywhere on social media, right?
I have LinkedIn. You can find me on LinkedIn.
All right.
Yeah.
I appreciate your thoughts. I know you got to go. I'll see you in NYC, okay?
Okay, looking forward to it.
All right, me too. And thank you all for watching. We'll have much more for you as part of our summer series, more incredible guests like E.B. Tucker, so be sure to stay tuned. In the meantime, remember to sign up for free premier content, special offers you can't get anywhere else at danielacambone.com. That's it for me. Thanks for watching.